Hi, good morning, ladies and gentlemen. Today we have Apple earnings. Well, there are many people interested in Apple earnings, but we already addressed Apple earnings ahead of the earnings report, which is today. Okay, we always address what investors really need to know in advance and not then after the fact as everyone else. So you have Apple here, pre-market $97.30. If your question is where do you find instructions ahead of earnings, and I'm going to explain it today in detail, I'm going to show you where you find it, okay? It's very simple. As a subscriber, you already had access to it. A small investor, okay? So in the service Live Markets Premium, you just have to visit our blog. You have here categories, and then if you go to Live Markets Premium, you find obviously Apple earnings, okay? The title, it does not say Apple earnings, otherwise people will be there clicking others, and we don't want that. So I'm going to show you where you find it. Meanwhile, you have here the blog where you have many free calls in the markets, where people they have been making a large amount of capital profits in Nintendo and many other stocks, Netflix, which I'm going to give you today also an example, Humane and so on. You click here on load more, since there are more than 1,000 articles, most of them complimentary. And you have this article here, live trading, let me show you, all right, this one here. Live trading Apple, zero losses in 19 years, okay? So zero losses in 19 years, it means that you have here the recommendation in real time, what we consider that corresponded to zero risk and a profit ahead of earnings, okay? So if you click there, if you log into the website, you have access to it, and today you have the confirmation of it, okay? So let me now explain other thing which I consider also important, all right? This recommendation, which is also available to small investors, as well as other kind of investors. As you know, there are several types of investors in terms of profile, aggressive, let's say average, and so on. What we address here in this article, in this recommendation, bear in mind that the article, in our cases, the articles, they are made available in real time, okay? So it's not after the fact, it's real time. We consider that the article contains instructions, what to do ahead of earnings, not after earnings, but ahead of earnings, for those investors that they are looking for zero risk, okay? So there are many investors today in the markets that they don't want to assume a risk, all right? Including through earnings. In that case, we made available that article to you, and the article, it has been available since you have here the date if you click there. We are going to do it right now. And the article, the date, it is from July the 16th, all right? So July the 16th, you have these instructions for those, I repeat, that they are been looking for zero risk in the markets. Then we have other kind of profiles or investors, hedge funds, investment banks, you know, those that they are aggressive, and also those that they look for instructions after the company reported earnings. That is a different, or that corresponds to a different point of view, and that is going to depend on many factors, okay? One of them, and obviously, you have to know very well the methodology, the investment methodology that we use here. Okay, this is rather important. It's not just to subscribe to a service to receive trade alerts. If you are not aware of the investment methodology, I think that it is more complicated to invest in the markets, although I repeat that you had plenty of free forecast and stock picks, as the case of TWIL, Uniten, and so on, if you wanted to take advantage of it, as many did, by visiting our website or referring to the material that it has been available on social media channels, and also free trading license. For those that they are aggressive, or for hedge funds, investment banks, the situation is different because it also depends on what you have been doing so far, okay? For example, if you have been following my personal recommendations, investing in Apple for the past 19 years or not, okay? So that depends on the profile of each customer. And since the profile varies, you have what we call custom service, okay? So that is the difference between the information that is made available to everyone that you have in the article, which is useful, compared, for example, to those that they choose the custom service and they remain more focused in Apple just because they want to, okay? Because in the end you don't have to invest in Apple or trade Apple, that is a decision of yours. Well, having said this, I'm going to give an example because many people, an example of a profit on the short term, which is different compared to the mid to long term, okay? So as you are aware of, for example, in the case of Netflix, we, ahead of earnings, we posted a recommendation, and it was to sell Netflix and to go short the stock, okay? Or to remain short, in fact, the stock since I agreed to strong sell $131, okay? And that rating remained valid until the point that Netflix fell to $85. Then we upgraded Netflix because we visualized that Netflix was going to bounce, okay? Not bounce in terms of making new highs, but nevertheless an important bounce, okay? So the company reported earnings and Netflix plunged, okay? Netflix plunged 16%, so it went from our trade alert $100.30 down to a price in fact below $85, right? So what we did, just to explain how we maximize profits in the markets, or we help people, because in the end, this is very complex to manage, because there are those that they are interested in short-term trading, there are those that they are interested in swing trading, and it is complex to manage this situation. So for example, a couple of days ago, you can check on the chart, Netflix, it was trading at $85. We issued a trade alert, this short term, okay, for those that they've been following my personal guidance in the markets, to buy the stock, or to cover the stock if you still maintain a short position, and to bet on long side. And today you have $91.5 pre-market. Right now it is 91. And for example, you close here the position Netflix, and it is a very important profit. It's $6 in a company that missed earnings. So one of your questions might be why these companies that they miss earnings, they keep moving higher. Well, there is an article that is already several months old, and you have on the blog of the company, which explains very well this, okay, until the US election. So there is no surprise whatsoever. And this is related to the fact that central banks, they've been releasing trillions of dollars for people, you know, to gamble in the markets. It is not our concern. It is others' concern. I'm just trying to explain why some companies, they miss earnings, and some earnings, they are actually very, quite bad. But then stocks, they bounce or rally, not only because stock analysts, they keep raising targets, okay? So no matter which is they keep raising targets. So there are already today stock analysts, in particular in the United States, with target prices $180 for Netflix. And this was also ahead of earnings, so people, they lose money because, you know, but that is not my concern. I'm just telling the story as it is, and also to explain the difference between short-term trading and then swing trading or mid to long-term trading, okay, where we inform people, look, the stock is likely to bounce if you want to take advantage of it, but there are also investors, or many, that they prefer the swing trading, okay? So that is, for example, those that have small accounts, normally they prefer, you know, both sides of the market, although it is by far more complex because you have to have a better understanding of the methodology and also continuous access to the trade alerts and materials. So this is often released, as you might understand, in our service, algorithm trading, which is available for institutions. Okay, so normally also small investors with $20,000 in the in accounts, they want everything. Okay, they want to trade all the earnings report. They don't have money in their accounts sufficient, just even for 3 stocks, but they want to trade everything. Okay, they want access to everything. It's amazing, right? It violates the methodology, but people are. Is one of our core rules. If you have, for example, 20,000 US dollars or 50,000, you cannot have more than 2 positions in the US stock market. Okay, it's forbidden. It violates the methodology, and the methodology, my friends, it has been proven to be the best ever in the history of the market. So quite frankly, I don't understand why people sometimes they have or might have questions, because those questions, in fact, I'm referring not to subscribers or investors, because every single question is addressed precisely in the methodology. So anyway, congratulations in Netflix, not because of the bonds. The bonds is the pivots that we have been discussing here, where you can make, for example, in 48 hours, you could make 60,000 US dollars or 120 or 60 million, 6 million. That depends on your capital. It does not depend on us, okay? So the pivots, they have been 100% accurate. So going back to Apple, 97 and 90 cents, this is what I want to tell you, okay? Explain today that you already had the instructions for zero risk, okay? Which is a concept that most out there, others in the industry, they don't understand. They don't know what zero risk is, because they don't have any track record. It is lousy, their performance. It is a shame. For example, yesterday I was reading an article about that individual, Bill Ackman, and his redemptions that they are already near 1 billion or so. But still today there are people opening accounts there. It's amazing. The person, I mean, I quite frankly, I don't find a proper description or adjective for this, unless what I've been here repeating for thousands of times, what Einstein already taught us 1 century ago about the Americans and the people in general and human stupidity. Okay, so quite frankly, don't understand how this Pershing Square company has not been, or the fund has not been closed. Why this person still exists, quite frankly, on Earth, what he's doing, why he's not been jailed, this Bill Ackman. It is something beyond our comprehension. But we have a different, rules. We have different. We live in a different country. Today, I mean, when we go back to the financial crisis, everything was allowed, and still today it appears that we continue precisely in the same situation. But that is a subject for the SEC or the Federal Reserve, since those are the main ingredients in the stock market. All right, so I wish you good luck going forward in Apple, as well as Netflix. And quite frankly, I repeat that Apple is a stock, or it has been a stock that I already published it here, complementary information how to invest in Apple for a long period of time, years. Okay, there are thousands, unlike everyone else. We never had one single loss trading or investing in Apple. And I think that several years ago, my recommendation, strong buy, when everyone else was downgrading the stock, namely Credit Suisse. You remember this, when shares of Apple fell to $400, Credit Suisse and many others, or most of them, they were downgrading Apple, and we are saying that on new all-time highs. So the stock crashed. You remember this 709, 707. It was when I downgraded the stock through strong sell. And then it crashed all the way down to $400 when no one believed in, okay? And then we appeared to strong buy. The stock made new all-time highs. Obviously, I'm referring to press split prices, okay? And those correspond to $50 or so. and at $133, and precisely this price, last year in 2015, I downgraded Apple to strong sell. I said shares, they are going to crash again, not crash like before, okay, but they are going down significantly. And one of the reasons there were many reasons, okay. One of them, it was related to that individual, Carl Icahn, pumping continuously Apple, and then in the end he ended up by closing his position in Apple. He was forced to close his position in Apple due to also problems, issues in many other stocks that he invested in the past, Chesapeake Energy, Transocean, and so on. But you already knew that was going to happen. The crash in Apple also occurred, or the important correction. Several times Apple corrected, so you had plenty of time to invest on the short side, all the way down to $93 as an average price when then I upgraded Apple, okay, and this was not long ago. Again, for example, a free call. I upgraded Apple and again other free call when I recommended to sell Apple $112. So when I recommended to sell Apple at $112, that this was a few months ago, then shares they collapsed again. And so if you want to buy Apple or invest in Apple, buy low, okay, don't buy high. And this despite of the fact that you had thousands of articles talking about the same in the US. Mr. Buffett is buying Apple. Mr. Buffett didn't buy Apple, that is a lie. Implicitly, he could have bought Apple. What happened is that he's losing money in Apple, okay? So why is losing money in Apple? Because if he got an employee long Apple at a price well above these current prices, and they are sinking in losses, and therefore you had to see thousands of articles upgrading Apple on the web. But the fact is that Apple has not done anything since then. So I do wish, I like very much Apple, the company, people, you know, the products, but I think that they have been, compared to the past, there is a big difference, okay? I liked Apple, in fact, when Steve Jobs was giving the face for the company. Today, the company remains one of the best companies in the world. But, you know, people are different, so we have to accept the reality as it is. Not that I have anything against them or the management, but there are things that I didn't like, I disliked, obviously, and I, you know, reported all those factors last year in 2015. One of them, it was the CEO of a company as Apple, for example, discussing Apple ahead of earnings with criminal comedian Jim Cramer, which I consider completely unbelievable. But, you know, everyone makes their own errors or mistakes. And I'm not going to comment on it in the sense that, you know, one should not make here judgments about, I have to go. One should not make judgment here about people just because of one act, okay? So if those acts, they, you know, continue, they remain, and nothing is done to change it, I think is more than complicated. Talking about the US stock market, I repeat that you had plenty of, you know, reasons to invest in the markets in the past, since we call it the important bottom. But there is also one thing that is very, very, very important, okay? Is that the valuation of certain companies in the US stock market is completely unreasonable, okay? So be very careful, all right? Be very careful, because, I mean, there are things that they are not what you think, that it is an illusion, all right? And since it is an illusion, probably there are companies that you should not play earnings whatsoever, or to have a position for earnings, since the valuations are unsustainable, okay? So, I'm going to give you here an example in real time, and then, my friends, you are going to see that these things, they happen, all right? So you have here Mobileye that was trading $50 plus, and now you have $40 in Mobile High, okay? So I already uploaded during the course of 2016 my view with regards to Mobileye, whether it was an investment opportunity, where it was speculative play, and I upgrade this stock. I cover the short position. You have a complementary live market call and a video on the web, in our own website, but also on the web, on Vimeo and on YouTube. Closing the short position in this stock around $25, $26, okay? That's when I recommended to buy Mobileye as an investment opportunity, when we close the short position. Well, meanwhile, this company, you know, it went to $50, $50 with Wall Street raising targets. Well, my friends, I already reported this last year when I downgraded Mobileye to strong sell at $63 when that individual, Jim Cramer, he was recommended to invest in Mobileye. Well, this is a speculative play, the price to earnings forward, you know, blah, 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 that people, they don't care about. You don't care about until you have a very large loss, then you are going to care about, all right? So Mobileye is not the only one. There are many stocks in the US stock market, my friends, that the valuations are so stretched that just a minor piece of news, you lose entirely your capital. So maybe, I'm just saying, that might be a very good opportunity for you, maybe to be in cash, I don't know. Or the other one is to follow my personal recommendation. For example, worth hundreds of millions of US dollars proven, which is, or which was, made available to you. I'm not going to even to refer to Twilio or Humane or blah, blah, blah. I'm going to refer to one of the most complex financial instruments that is in the markets, which is oil, okay? So you have oil at $51.20. I'm referring to light crude oil futures. And I said you sell and then you go short, okay? So if you sold oil at $51.20, and bear in mind that also I made available the call to buy oil or when to close the short position, sorry, at $28 when Goldman Sachs was downgrading. So if you do what the opposite of what these investment banks, they often recommend, I guarantee to you that you have the key to succeed in the markets. If you follow up their recommendations, as I've been explaining in Kite Pharmaceuticals, in Caterpillar, I mean, there are so many examples, your probability to make, or First Solar, your probability to make money in the markets is, you know, 5%, 2%, all right? Because they are not going ever, in first place, they are incompetents. And secondly, they are not there for free lunches, okay? So be very careful, because these individuals, or most of them in some companies, although this SEC, it is there, but in many cases for nothing, all right? There is a lot of corruption going on behind the curtains, okay? People that they are paid to upgrade stocks, people that they are paid, you know, blah, blah, blah. And it is real, okay? So it is as it is, my friends. And then, you know, shit happens, all right? So be very careful in the markets. I think there is today a good opportunity for you to move in cash, probably. We also shared with you here, for example, in the Q's Power Shares, which made a very good rally in tech sector. Some companies that they are of high quality compared to others, okay? For example, recently, just I think a couple of weeks ago, you had Facebook at 108, 109, okay? Today you have Facebook at $122, right? So again, if you want to buy, to invest when you had the correction. Not then, you know, you are not going to buy at 122, even if Facebook, you know, next week is going to be $140, okay? That is against methodology, all right? You already bought the stock. At most, you can protect your position, all right? Which is a different matter. If you keep buying, well, last year, or 2 years ago, better say, it was a different matter, since Facebook at $20, I mean, when Forbes magazine, you remember this, or the Americans, they were saying that it was going to $14. Okay, they said it's going to $14. The company has Facebook, and the Americans, they believe in that. Okay, so they were selling short Facebook, you know, lifetime historical, you know, investment opportunity, as it was the case on with Google on IBU. So I live with Apple and this company that meanwhile, you know, is crashing. And my friends, also you had here information about it, to sell the stock. And bear in mind that this information with regards to mobile eyes, these speculative stocks, you not only you had information about the what we consider the upside, right? Sometimes stocks they trade above the upside, but that is not necessarily bullish, okay? Because the higher they go, the more they crash, all right? So this case of mobile eye, it has already been addressed many months ago in this service, the case of Live Markets Premium, all right? So if you wanted more information, you had it in Platinum or other service more advanced. You receive information depending on I think that for example, in the case of Live Market Premium, quite frankly, you had many or plenty of. I have to go, no? Oh, all right. Thank you and good luck for Apple and Mobile Eye.